Hello, today I have with me Jaco Prinsloo, Chief Executive at Sylvania Platinum. Hi Jaco. Could you please give viewers who may not know about Sylvania Platinum an idea of what the company does?
Okay, Sylvania Platinum is a mid-tier PGM mining company that's listed on the AIM markets. We've been in operation for about 15 years now. Having a combination of our current cash generating businesses are a combination of 6 dump operation plants that retreat old historic tailings dumps and recover PGMs from it. And then on the other part of our business, we have some exploration assets for which we own mining, approved mining rights, and on which we're busy with a couple of optimization studies. So that's the snapshot of the group.
Jaco, you reported second quarter results at the end of January and you've had your best half year since 2020. You raised profit guidance, but quarterly profit was down. Could you explain?
Yeah, so we're very proud of the past quarter's production. As you said, it was a very solid production. The half year, as you say, was one of the best since 2020, but it's also, in fact, the second best half year results in the history of the company. So it's been a good performance, especially the guys being able to replicate a good quarter-on-quarter performance. The guys have run very good throughputs through the operations, keeping their tons at good levels, good stability that enabled us to also improve our recoveries about 6%, which led to the higher and contributed significantly to the higher production. You're right, the profits unfortunately were down, I think about 27% quarter-on-quarter. And although the cost was fairly flat compared to the first quarter, the most significant impact was about 8% drop in the PGM basket price that affects us. So the 8% drop in PGM basket price does not affect your revenue in this current quarter. It also affects the sales adjustment that we have for ounces delivered in the previous quarter that's being declared as revenue, but only being realized and paid in this current quarter. So the combination of those two led to the drop in the revenue line at the bottom. So that unfortunately is it, but we are very comfortable with the gas production levels, said a very solid production, and I think the outlook for the rest of the year is very good. So it's based on this robust performance that we've had in this first half year that the board have decided to raise the guidance by about 2,000 ounces to 70 to 72,000 ounces for the year. And currently we don't foresee anything that would derail that. We think it's quite achievable, and that's within our reach. And barring any detrimental or further degradation in the Eskom load shedding status, there might even be a little bit upside on that if you look at the half year performance to date. So overall, we're very confident in the production performance and forward-looking performance.
How big an impact are higher costs having on your mining operations? And when do you see cost pressures easing? Are your margins safe?
I think it's not just us and not just the mining companies in general that have seen higher than inflation cost increases. The global inflationary pressures have impacted industries across the globe in various industries. So we're seeing those same impacts. And while we can't necessarily change that, I think we can focus on the items we can control, and it's making sure that stuff like our consumables are under control and optimized. We reduce wastage within the group, and we obviously clamp down on discretionary spend so that we can get the operating cost as low as possible. But saying that as well, as I said, it is an industry-wide problem, and most PGM mining companies, or I dare to say all, are impacted by the same pressures, and which means that the resultant outcome is that even though, if you look at the last results declared this summer, we're still in the lowest quartile of the PGM cost curve. So it still means we have a very robust business model with good profit margins, and I don't foresee us in the short term for our margins to be at risk at all, and I expect us to deliver solid performance in the next financial year.
Jaco, what have been the big drivers of PGM prices over the past year, and what's the outlook for 2023?
Yeah, PGMs have been quite a frustrating space in the last 2 to 3 years since COVID, and also with the pending war in Ukraine, the conflict with Russia. So I think the biggest impact during the last year especially was on the demand side. where both for the Russian-Ukraine impact, the strict COVID regulations and restrictions in China, and also global financial fears on inflationary awareness has led to lower vehicle demand. And with our major revenue coming from palladium and rhodium, which are primarily consumed in auto catalysts and vehicles, there's a direct relationship. If the vehicle sales go down, demand is low, that gets impacted. So certainly in the past year, there was a much slower, everybody was anticipating a recovery during the past year after COVID, and the major impacts of COVID from 2020, 2021, and then the Russian-Ukraine impact, high energy prices, China all impacted, and the recovery was not there. Saying that, I think while the Russia-Ukraine conflict is still pending, China have eased their lockdown restrictions and is starting to increase production, and the analysts are believing that we would see an uptick in vehicle prices, and therefore we're quite confident that the metal prices on the demand side at least will be recovering somewhat and would boost metal prices. I think they're forecasting platinum and palladium and rhodium to remain in deficit, while platinum might even move to a deficit earlier this year than the original anticipation of only in a year or two. So that's good. On this other side of the equation is the supply impact that will impact price, and a lot of analysts and institutions are wary about the impact of South African load shedding, especially on the major producers who have indicated some signs of concern about their forecast going forward. And they believe that the inflationary cross pressures we spoke about earlier, together with potential Eskom interruptions, might put pressure on the supply side. So you take the balance of the supply and demand, I think the platinum market will be quite robust, and certainly from our point of view, and I think in terms of the basket we have, we're quite confident about the outlook in the medium term.
You generate plenty of cash and pay a generous dividend. Now, income investors will want to know how safe that payout is this year. Is there anything that could affect shareholder returns?
No, look, so we're very aware and acknowledge the importance of the dividend, especially for our income investors, as you mentioned. And I'm very proud that we have been able in December to pay our 5th consecutive annual dividend to our shareholders. And I mean, that was right through the COVID years, we managed to maintain it. And I'm quite proud for a company our size that we've been able to do that. I don't think many companies in the PGM space or mining space in general are able to have the same track record. And certainly we do believe that we are at a sustainable level at the moment, and we will definitely try and maintain levels at dividends at current levels. So you ask what could derail it. We don't foresee anything in the short to medium term that could derail it. I think we have everything under control. We have a robust business model. We have good profit margins. I think that together with our strong cash balance would put us in a unique position to ensure that we can return value to shareholders. Obviously, if something dramatic would happen, abnormal deterioration in Eskom's position further, which we don't anticipate, then on one hand we have to review your production levels and so on. But otherwise, I think we are very strongly focused on returning value to shareholders, both in terms of dividend and share buybacks, and we will continue to use a balance of those to return value to our shareholders in the future.
Jaco, you've got a pretty busy year ahead. What events should investors watch out for in 2023? So
we have, and maybe let's first start with our current cash generating businesses, the dump operations. That is obviously very important for us, which is the enabler for us to do all the things and secure growth going forward. So we certainly are going to look at optimizing of Tweefontein's MF2. The secondary milling flotation project was just commissioned in December. We're currently in the optimization phase, and we will be looking to optimize recoveries on that operation, and then to continue with the execution of the Lennox project, which is a duplication of that same MF2 process, and it's due to commission between June and August this year. So that all will assist us with further enhancing our recovery potentials. And also in terms of growth opportunities on the dump business, we've announced in our earlier releases that we are engaging with some third parties external to our current host mines in terms of potential dump opportunities, and we're carrying on with negotiations and evaluation of those projects and hope to draw those to conclusion towards our financial year end. That's on the dump operations. On the exploration assets, I think most of our investors will have seen we've released our first set of results from the initial optimization studies in late October 2022, and which included the scoping study and updated mineral resource estimate on our Volspruit operation, and also updated mineral resource estimate on our Far Northern project. So those were all quite exciting. So in Volspruit in particular, the scoping study indicated a positive NPV and a investment case when we only looked at the North Pit, which had JORC compliant data at that stage. And we would be looking in this next 6 months to update that scoping study further by including our South Body, which is an additional 40% in volume, and also include rhodium that wasn't initially included because of the non-JORC compliant results we had. But based on our metallurgical results, we know that rhodium is about 5 to 6% of our pearl at Volspruit, and that could lead to maybe a 2 to 4-fold increase in the NPV declared. So certainly on Volspruit, we're looking to get that updated scoping study and resource estimate done also by our year end. And on the Far Northern Limb, it's just beefing up our mineral resource estimates further on our Hacra and Aurora projects, and also completing a scoping study on our Hacra operation. The scoping study on our Aurora operation. So while we certainly recognize the importance of our dump operations and the need for us to continue optimizing and grow that current dump business, is also important, as we've illustrated or indicated before, that we do perform these optimization studies so that we can see how best we can return value to our shareholders in terms of the exploration projects, as both form a critical part of our pillars of our growth portfolio, and therefore we have to address both of them. So those are the things we can look out for towards the end of the year to come out from us.